What is up, guys? Excuse me. It's your boy, No Risk, No Premium, back with another episode of the 2 Minute Drill, guys. Today, we had a sell that's been heavily anticipated by many market participants. And today we got it. It was a very slow, like knife melting through butter of supports, right? Like if you actually look, today was just a very slow, right? Once we couldn't get back above that 404, which was pretty much last week's low, we ended up just taking a very nice stroll down to put lane all the way down where we eventually got our bounce where between that 398 and 400 level. One thing to note, bulls didn't quite reclaim the 400 into the close, but still held 398. And currently right now, futures are about 7 handles so far. We'll see where we might have a slight gap up. I have no idea. Putting SPY right at about 400 even. So we'll see what plays out for tomorrow. But as for tomorrow, right, what are we going to expect? Okay. What are we going to expect? FOMC minutes tomorrow. Okay. Not the meeting, the minutes. What's the difference? Minutes is the notes from the previous meeting. Basically, Powell was basically saying, yo, we're going to keep on having to raise rates. We don't see, we're not going to stop early, basically. He basically made a reference back to, I believe it was the 80s area where they put them down too early, blah, blah. This shit went right back up, whatever. I just want you to think about this too, just from a macro perspective. I don't really give a fuck about macro when it comes to the markets. I just play the levels that's in front of me. Because if we really played all the macro, nothing fucking good's out there. Consumer debt's at all-time high. Bankruptcies is all like getting as hot as the start of the year as it's ever been. Credit card debt is fucking massive. Rates are fucking huge. Inflation's still out of the market shouldn't even open. All right. That's neither here nor there. But here's one thing I do want you to take in. Like, just think about this for a sec. We've raised rates of the Fed funds rate four times its average it's been for the last like 10 years. Right? They've almost been fucking zero the last 10 years. For an entire year, we did the most, in my opinion, the most aggressive of this century rate hikes. Okay. And inflation isn't even cut in half. Interesting, right? So tomorrow, what do they say in the notes? Do they double down on the hawkishness, right? Maybe. Right? Maybe we had a CPI print and a PPI print that weren't necessarily bullish in the sense of things not costing as much. So let's see what the notes come out tomorrow. I really don't care what they come out. I just care on the reaction. Now, until tomorrow, what you can expect is this. Okay, what you can expect is this. Typically in the morning, there is a directional move and then a range into the data release. To me, I love to play the range. So let's look to see what could possibly be the range as long as we open up and hold today's low. Okay, well, I think this area to possibly ping pong in tomorrow would be between the 400 and 404, the previous week low. Okay, those are the areas I'll be watching. Now, if for some reason we are to get below there, like let's say we gap down for some reason, I'm going to look at 396, okay, right here, and then 393 as my areas. Why? First off, okay, the 50 MA on the daily, right, is this purple dotted line right here, right? You see it 396. And then the 200 MA is 393. Interesting. We've gotten extended from them. We've broken below the 20-day. Okay, we've broken below the 20-day moving average is a green dotted line up here. And now I think we eventually touch probably this week. Okay, probably this week, right? So for tomorrow, the game plan is this. Look for the directional move and then get the range into the FOMC minutes release. And then just fuck off the rest of the day. Don't try to create the crazy action after and this and that. And listen, most traders I know don't even trade tomorrow. They don't trade these huge events because it's not fun. There's whipsaw moves. There's stop losses that get hit. You typically overtrade. You get emotional. You do all these things. Look, for me, I know this. Likely, we get a directional move and a nice range, and you just play the range. The other reason you want to play the range is you'll have implied volatility on your side as well. Implied volatility going into a major data release, like economic data, like a FOMC event, like earnings, right? Or just news events that people know are going to come out. the implied volatility tends to rise. So you want to play that in your favor, right? Play that in your favor. If you know you're going to buy a huge support or sell a huge resistance, you're going to have some IV getting juice behind it as well. Now, you must, if you're going to play an IV pump, it will get crushed when the minutes come out. So you'll need to exit any positions you're in so you don't get IV crushed. Okay, don't get IV crushed. Basically, it's like taking the winds out of the sails of a sailboat. You ain't going to go nowhere. Okay. Now, that's my plan for tomorrow. I'm going to look at this range between 400 and 403, depending where we open. Okay, watch for the range to be established in there. Okay, if we open below 398 for some reason, or 399, today's low, okay, you'll want to target 396. Okay, watch for the range to be established. Okay, macro levels for the remainder of the week, though, I think are important. Because one thing I want to note here is this. We have a stage 1 consolidation here, accumulation. We had a stage 2 breakout. Then we had really this stage 3 distribution, which we can draw easily. Okay, basically like this. Yeah, granted, we did, we got a little above, but every time we got above after that day, we got completely ripped. So the bottom of the range is here. Okay. So, right, we had a stage 1, stage 2, stage 3. Now we've broken out of this. So for me, I think the trend has changed. We used to buy the dip, buy the dip, buy the dip, buy the dip. That was so much fun. Now what are we looking at here? Now I think underneath this 405 level, okay, any rips into 405 that fail, you want to short the piss out of them. Okay, we are going from buy the fucking dip to sell the fucking rip. Okay, unless 405 to 408 gets taken out and we get Ripper Magoo, but it doesn't seem that way, especially after today's action reward. Bulls seem to be non-fucking existent. Okay, so where could we possibly go for the rest of the week if we want to continue the downside? 390, 396, 393. Then look at this huge demand here at 390 still, right? 390. I would not be surprised. I would like a bounce at each one of these levels. So play them respectfully. Okay, play them respectfully. There are a few gaps to the upside here, though, right? First gap being into obviously up to the 408, and then from 408 right to the 408 close, and then up to basically 408, 409 up here, right? So, or excuse me, 407. I said that wrong. 407 to 408. There's a huge gap up here. This gap could be filled on the wick. Some people won't count it. I really don't care. But you would think if we get above today's high, we'll likely come test that 4056 area. That was pretty important, right? You could see the times we bounced off it. Okay, now that we've broken below it. So let's see, do we get a back test into this area here? I'll be watching for shorts up here and taking longs if today's low holds, or I really like 396, 393, and then 390. Nice round whole numbers. You can't fuck it up. So guys, do me a favor, wake up early, get your levels right, and of course, don't do anything fucking stupid. We'll see you bright and early. Peace.